Good morning and good afternoon to all of our attendees. Thank you for joining today's Family Office Network's webinar series, Going Green, the Future of Recycling. Sasha Gretman is the co-founder of MiddleMarch Partners, the merchant bank that is sponsoring this investment opportunity today. Over his 30-year career, Sasha has served as a private equity investor, an investment banker, and a strategy consultant, always focused on business services and financial services. At the end of today's presentation, we will have plenty of time for Q&A, and we always encourage your questions. Please use your questions chat option on the right side of your screen to send over any questions you have so we can answer them accordingly. And Sasha, I'm going to let you get started.
Thanks so much, Lindsay. Hi, I'm Sasha Gretman from MiddleMarch Partners, and I'm here to talk about Project Green Loop, a yard waste recycling co-investment that we are doing in conjunction with RFE Investment Partners. I don't know how many of you have ever wondered what happens to the grass clippings during the summer that you put out on as part of your garbage, or the leaves in the fall, or the branches that have fallen after a big storm. But I'm here to tell you that there are 30 states where that just gets thrown out with the garbage. It gets picked up by your garbage company and carted off to a garbage dump where it decomposes alongside all sorts of other things. But there are 20 states that actually have responsible yard waste recycling laws that require that, that organic material to be disposed of responsibly. And don't get too excited, because when I describe to you how that's really done today, you're going to see it only solves part of the solution. What effectively happens in 20 states, specifically in the Southeast, where there's a lot of yard waste, is that yard waste has to be picked up and brought to what they call a collection center. It's a specialized center to receive yard waste. And you pay for the privilege of delivering that yard waste to them. And then they, in turn, disaggregate the wood from the grasses and leaves, because grasses and leaves can be turned into compost and mulch, and wood gets turned into wood pellets. They allow some of that yard waste to decompose a little bit, and then they either send that to yet another yard waste disposal company, what's called a compost production facility, where that gets processed a little bit more in a kind of organic process. There's not a whole lot of activity, a lot of technology applied to it. And then typically, those companies will find idle fields that are owned by farmers and real estate owners, and then that compost gets laid out on those fields and it decomposes naturally. And while this sounds decent, what we're really talking about is a disposal solution. We're not really talking about recycling. They have just moved a problem from one place to another. Project Green Loop is trying to do something radically different. What we plan to do with this project, this growth equity investment, is merge a collection center business with a compost processing facility business. By linking the two together, we can turn what has historically been a disposal product into a product that actually has real value and that somebody's willing to pay for, and that's the product of compost, organic compost. And we think we are really the first company of its kind in a particular state, which we'll talk about, that is going to be able to create a circular economy business, hence why we call this Project Green Loop. We're going to be taking waste and converting it into a saleable product by using technology, process knowledge, and a more professional approach to how to dispose of and transform yard waste into something of value, something that is good for the environment and frankly is good for all of our pocketbooks, because we think we can create a very profitable business by this investment. So let me take you through it. But before I do, let me just give you a little bit more background on who we are at MiddleMarch Partners. MiddleMarch is a merchant bank that combines investment banking with co-investing. It's really the oldest form of investment banking back from the 19th century, where the banker was also an investor. And because of our backgrounds as bankers, private equity investors, and operators, my partners and I feel very comfortable getting involved with our clients' businesses and being value-added investors after we help put together the transaction. We've raised over $1 billion for typically technology-enabled business services and financial services companies, and we tend to focus on companies that are either innovating or disrupting their industry. And in this particular case, I would say we're doing a little bit of both. Project Green Loop is innovative. We're not using cutting edge technology, but by deploying technology smartly, we are going to transform the yard waste industry. And we are comfortable co-investing alongside lead investors in the deals that we work on. We typically do not set price. We serve as the banker to our client. But once a deal has been structured with a lead institutional investor, such as PIMCO or Waterfall Asset Management, who we've co-invested with in the past, we, on occasion, will co-invest alongside them. And in this case, we're going to be co-investing alongside RFP Investment Partners, a 40-year-old lower middle market buyout fund. And finally, just a few words about myself. I'm one of the co-founders of MiddleMarch. I spent the beginning of my career in strategy consulting at the Boston Consulting Group. But for the last 20 years, I've been actively involved as a private equity investor and as a merchant banker. I was a private equity investor at Goldman Sachs, and then I ran the strategic investments group at Citigroup. And then I was a partner at TH Lee Putnam Ventures, a billion-dollar growth equity fund focused on financial business services, before founding MiddleMarch about 10 years ago. And I've invested over $600 million in private equity deals over the course of my career, and have both focused heavily on private companies, but also publics and roll-ups. And all of those experiences are going to be relevant for this investment, which we believe has the potential to be a platform investment that can roll up yard waste businesses, not just in the state in which Green Loop is located, but in many other states as well. Let me take you through at a high level what we think is exciting about Project Green Loop. Let's start with the fact that we are going to turn green waste into something of value, environmentally friendly output. And for those of you who might not know a lot about this space, I just want to take a second to explain. Compost is really an organic substitute for fertilizer. It is decomposed plant matter. It can be also animal matter and food waste, but it's organic material that enriches soil and helps sequester carbon dioxide from the environment. So it's very good for the environment, and it also reduces the amount of water that's needed to grow plants. So you don't need as much external water to perform agricultural tasks like growing crops or your garden. The second product that you can produce from yard waste is mulch. Mulch is essentially an insulation layer made of wood that helps keep the ground warm, and it allows for the capture of, again, moisture. So in the wintertime, you'll put mulch out to keep your soil from losing a lot of its nutrient value and water value. And then the third product that you can make from the wood that's in yard waste are wood pellets, biofuel. This is essentially a substitute for coal and is used in power plants as a source of energy to run power plants. So those are the three components that you can make. We're very much focused on compost, and we'll discuss this in greater detail during the course of this discussion. We are interested in professionalizing a mom and pop industry. The yard waste industry is probably even less developed than where the garbage industry was in the 1970s and 80s. And we all know what waste management did to that industry. They professionalized it. Today, yard waste is a mom and pop industry with people who are running small businesses, some of which have reasonably good margins, but not great margins, and they're lifestyle businesses. And they're not really positioned to make the investments in technology and process that would allow them to create a truly an institutional grade compost product that would appeal to agricultural firms that would use that product to enrich the soil of their farms. The way we're going to professionalize the mom and pop industry is by transforming and integrating the value chain. We're going to take the front end business, the collections business, and combine that with the compost production facility side of the business. By merging those two together, we can eliminate certain overheads, we can make it more efficient. And then by injecting technology in the form of processing equipment in both the collection center and in the compost processing facility side of things, we can enhance both the amount of waste we can process, but also the quality level. And in doing so, we position ourselves to get a second bite at the apple. As I told you earlier, in the world of yard waste, you pay for the privilege of getting rid of your yard waste, and that's a revenue event. But generally, that's really the only revenue event that happens here. Everybody else has to get paid from that money to get rid of dispose of the yard waste. We're transforming this by having a whole second bite of the apple by creating a compost revenue stream whereby we sell compost to agricultural firms and fertilizer and compost distributors, thereby giving us more revenue potential. And finally, we think we can really grow a $5 million EBITDA business into a $15 million EBITDA business. And that's the MiddleMarch Capital Partners case. That's our investor case. Management thinks they can do quite a bit more. They think they can get that to roughly $20 million through these enhancements in margin and growing the top line. And we think that this business is the blueprint for a much larger enterprise that we hope to build with Project Green Loop, which is a multi-city, multi-state yard waste recycling business, combining the front end business with the back end business and selling compost in multiple locations where there's a lot of yard waste to process, and that's really the Southeast. In terms of how do we make this investment go, we clearly need a strong sponsor. We think we found one in RFV Investment Partners. They've, as I said, had a 40-year track record, and specifically have had some real successes in two similar deals, one in garden products and another one in waste processing. So they grasped very quickly what Green Loop was about, and they are prepared to lead this transaction, not just through this transaction itself, but to help the business grow. And obviously, we as the investment bankers of the company have a unique position. We know management well, we know RFV well because we brought RFV to the table. And our growth equity experience should position us to be a value-added investor on the backside of this transaction. In terms of what makes this investment opportunity compelling, we can invest up to $10 million alongside RFV in the exact same participating preferred equity security that they have structured. It has some unique characteristics. It's got 11% preferred dividend, which is high, but more importantly, it has a 5.5% that's paid in cash, and that's very unusual for a growth equity stage company. This has to do with certain requirements that RFE had that we were able to structure as part of this transaction, but it creates some current yield, which will be attractive, we think, to us as investors. And finally, we think this has the potential to produce a strong return, a 30% gross IRR, a 3.5 times multiple. And that's in our base case. We think there's significant upside above and beyond that in terms of geographic expansion and extension to wood pellets, which I've talked briefly about, but is not part of our base case plan, as well as additional margin improvement that management believes they can achieve that we frankly have discounted in underwriting this transaction. Obviously, we all know about the bush and tree trimmings, the grass clippings, the leaves, and the dead trees that we talked about earlier, but there's all sorts of other forms of green waste that need to be thought about. It's citrus waste in certain states, it's land clearing debris, it's storm debris. And the state in which Project Green Loop is operating is an extremely fertile market for this. It's the fastest growing state in the nation. It's in a warm climate, so it produces a lot of green waste. The state produces about 7 million tons of yard waste a year, and 3 million of that is in the specific city market or MSA that Green Loop is going to operate in. And we think that there's 500,000 tons of compost demand within 150 miles of where Green Loop is located. So we think we're in a well position to be able to take advantage of this. As you can tell from just looking at these pictures, the yard waste industry is not a advanced industry. It really is still in the disposal business, and therefore it's unsophisticated and undercapitalized. And we think that's the great opportunity here. We think we can build a high volume technology-driven business by injecting those technologies into how these yard waste assets are processed. But the mom and pops neither have the appetite nor frankly the margins to do so. They're pretty much satisfied running small businesses, but we think that by creating a platform business, we can transform this industry and produce a product that they have historically not been able to produce, an institutional grade compost product that agricultural firms would be willing to pay for as opposed to just receive free. And by the way, when you're dealing with an uncontrolled compost product that doesn't have the kinds of controls that we're anticipating providing, you get a product that is unpredictable. It may have too much acidity, it may have not enough moisture in it, and therefore an agricultural firm is going to think twice about using a product that could burn its crops. That's why you can only use it on idle fields when you're buying it from a mom and pop. But when we transform it into an institutional grade, OMRI certified organic compost product that proves itself to be as high quality, if not higher quality than chemical fertilizer, I think we're going to get a lot of takers that we can deliver a local product that's very different than what they've been buying today. This business is being led by two executives that bring different skills and experiences to the table, and it's worth taking a moment to talk about them. Mark Owensby is the CEO, and he's the chief operator of the business. He's focused on putting the pieces together. His background is unique for this. He was the chief operating officer of US Ecogen, a biomass power business. And in order to power a biomass power plant, you need urban wood and yard waste because you need that wood, the wood pellets, to power that generation facility. So he learned a lot over the years that he was running US Ecogen about this space as he was sourcing that resource for his business. And that's where the germ seed for Project Green Loop came from. He knows this market, specifically the market that we are entering, and that's how he was able to identify the two assets, the collections business and the compost processing business that we're acquiring and that are under LOI already. Prior to that, he also ran a technology-based company that he grew from 0 to 125 employees and sold to Qualcomm. So he's a successful entrepreneur in his own right. He is complemented by Roger Johansson, who serves as the executive chairman and is really the deal professional who is both putting this deal together, but also is going to be very much focused on acquiring additional assets down the road. His background is in biomass energy M&A. He's a banker by training. He did a lot of work in the biomass energy industry over the last 4 or 5 years. He worked closely with Mark when Mark was at US Ecogen, and he spent the better part of 20 years working on deals in oil and gas, offshore wind, and renewable energy. So he brings a lot of transactional experience to the table. In terms of the vision for this business, and we talked a little bit about it already, it's about securing supply at the collection center, optimizing logistics. Remember that heavy wood and yard waste has to be partially processed at the collection center and then moved to a compost processing facility. So optimizing that creates efficiency and also eliminates environmental exposures. And then you've got to process that material both efficiently and effectively, and that's where all that technology comes in, how to create. I'll show you some pictures of the kind of technology you use to process compost. And ultimately, what we really want to do is create a product that meets the needs of professional agricultural people who need a high quality substitute for fertilizer, and to develop the kind of brand relationship that they can trust so that they can buy their compost locally as opposed to buying it from national distributors, which is the way historically they've received it. And it's more expensive to produce that way, and it's more expensive to transport from the national distribution centers to the local markets. So the idea is to pull the pieces together, take out cost, inject efficiency and quality control, and truly create a brand that the market can trust. You know, in 2020, these two separate businesses that we have under LOI, we're in deep diligence on acquiring, were two separate businesses. You had a yard waste collections business, had 3 locations in and around the city in which it operates to pick up, to receive the yard waste as it's produced. And then they would process it and then hand it off to a compost processing business, which would process it to some degree, and then ultimately would essentially give it away to farmers and real estate owners that had land that could house this disposed of yard waste. That business was about a $15 million top line business with about $3 million of EBITDA, 20% EBITDA margins, perfectly respectable, but not particularly strong. We believe that the Green Loop plan of combining and integrating the front end business and the back end business and injecting the technology and process management allows us to build a very different business. It's one that doesn't have to give away the compost. We can sell the compost to the agricultural community, as well as the national fertilizer companies that are hungry for organic compost for their fertilizer products that they sell into the consumer retail market. And that business, we believe this year will produce 19 million of revenue and about $4.9 million of EBITDA, 25% margin. That is really simply, just so you understand where those numbers come from, that increase in revenue is because by combining the front end and the back end, you give the front end confidence that they can bid more aggressively on yard waste. They can go to municipalities and really push to get the business. What you don't want as a collections business is to collect up a bunch of yard waste and discover you have nowhere to put it, because you can't keep it on your property forever. You're really the front end of the process. So when you have the two businesses merge together, and you have confidence that your compost processing business has a way of getting rid of their compost and making room at their site to pick up your additional yard waste, you can be more aggressive. And that's exactly what's going to happen here. Next year is really when the technology will be fully implemented, and when you'll see, if we'll go through the financials in a few minutes, you'll see even more powerful economic expansion as the margins get even bigger. But we believe that this business at full tilt can get to about 36% EBITDA margins. It's lower than what management believes, but we think these are very strong margins in light of the way we know the business looks today with the unintegrated form that the industry is currently. How do we create this value? It really comes from three things. Having the right collection center. The company that we're acquiring is the #1 collection center business in its MSA. Getting a compost facility that has the ability to be transformed into something that is state of the art, so to speak. And we've acquired a facility that we have the room and the ability to turn into a highly efficient compost producer. And then it's the investment in technology. And the picture on the right is what they call a windrow turner. And I just want to take a second to explain how compost gets produced for those of you who are interested in understanding it. I don't know if you look in the middle picture, you can see sort of vertical lines. Those are what's called windrows. That's essentially chewed up leaf and grass material that's been turned into essentially triangular rows of waste material. And in order to compost that material, you have to inject oxygen into that windrow, because the oxygen is almost like a fuel that allows the organisms in that compost to decompose, cause the decomposition to occur in a controlled manner. These windrow turners on the right are one component of what we will be introducing, but this allows you to control how fast the compost decomposes, and that allows you to manage the nutrient value, the moisture levels, and the acidity associated with the compost that you're producing. So we integrate these two businesses together. That allows us to reduce costs and gives us the confidence to increase the volume of material that we run through the two businesses. We invest in technology. We're going to be spending $4 million at the collection centers, introducing machinery that allows us to disaggregate and chop up the yard waste appropriately. And then we're investing $4 million at the compost facility to upgrade it and put in the technology like the windrow turners and other things that are necessary to make the composting go effectively. And that will allow us to materially increase the compost facility's throughput capacity. I think we can increase it by almost a factor of 5, which will allow this single compost facility to handle the total amount of collection center throughput that we believe that the business can generate over the next 5 years. So that technology investment pays off in less than 2 years as we drive more volume through the system. And when you have these two business elements tied together with the right technology, it allows you to produce a superior product. And that product obviously is compost. It also ultimately could include wood pellets, but that product makes us a local provider of compost. And it allows us to sell at prices that are very competitive in the local market. And frankly, it allows us with confidence to potentially lower the upfront collection center price per ton in order to drive more volume into our collection centers, because we know that we produce a whole second bite at the apple when we take that tipping fee waste and we then convert it into compost. So we feel that this gives us pricing power both on the collection center side and the compost side. And with that in place, we can really dominate the market that we'll be in, because we'll have a cost advantage and a product advantage relative to all the other yard waste disposal participants in that local market. The long-term goal is to be the go-to provider of compost to large customers, large agricultural customers. That's our focus. We're really on the institutional side trying to focus on the agricultural community. But we realize that that's a process, and I think it's worth taking a second to talk a little bit about the market and how can we de-risk this transaction by leveraging some of the participants in it that we think can be helpful to us as we can be helpful to them. In the near term, we think it makes sense to sell to fertilizer and compost distributors, typically on the consumer side, that have experienced what I would describe as the COVID bump. As people have been forced to stay home, people are tending to their gardens. And that has created a very strong demand for organic fertilizer for people like Scott's, which is one of the leading providers of fertilizer in the country. That organic fertilizer is growing at over 20%. And we have a relationship with Scott's that we're developing. Scott's had a relationship with our compost processing company in the past. And we're in the process of developing a purchase agreement that would allow us to sell up to 200,000 tons of compost to them at a wholesale price, probably in the $24 to $28 per ton level. That is for organic, to give them the resources to make their organic fertilizer. Organic retail composting product is selling at 165% annual rate. It's growing at 165%. So there is, for organic compost, not organic fertilizer, but compost, an even higher demand, because I think the American consumer recognizes some of the benefits of organic compost, and that mega trend is also kind of wind in our sail to help drive up the demand for the product. But what we like about a relationship with Scott's in the near term is it de-risks the transaction. We can step on the gas, be more aggressive in the collection center business, bring in more volume, process it, turn it into compost. But by having a relationship with Scott's, we know we have a takeout partner who will buy it at a price that gives us a second bite at the apple, maybe not quite as rich as we'll have when we go to the agricultural community, but a strong economic driver to help us support our growth. Our longer term goal is to sell to the local agricultural market. The local agricultural market today, the farmers in this area, are typically using primarily chemical fertilizer from the Monsantos of the world, because that's what's been readily available and is of a consistent production quality, and they can trust it. It may not be as good for the earth, it may not be as good for their crops, but it works. We believe there's, as I said earlier, 500,000 tons of compost demand in this market. And that number didn't come out of thin air. That came out of a market study that we commissioned with RFE as part of the due diligence that we're doing. But in order to get farmers to embrace this product, we do need to educate them. We have to build trust. We have to demonstrate that the product is OMRI certified. And to get them to a place where they're willing to buy our compost locally. The power of that is pretty profound, and I just want to take a second to explain it. As I told you before, you've got a collection center, process, put it on a truck, send it to a composting center. The distance that our trucks are going to travel is about 10 miles. People who don't own both their composting center and their collection center sometimes are driving hundreds of miles to find a composting center or an idle field where they can dump their yard waste. So we're shortening that. But what we really want to do is bring yard waste to the compost center, turn it into compost, reload the truck with ready to consume compost, drive it to one of the agricultural buyers in and around the market that Green Loop operates in, create a much tighter network so that we have no deadheads. We're making good use of our transportation. We're delivering a product locally, which is going to be cheaper to produce and cheaper to distribute than the national distributors. And hopefully that win-win drives the local agricultural market to embrace this product. And we think that there's strong appetite for that. And we're currently having conversations with a number of larger farming producers to understand what it is they need in order to be comfortable making commitments to buy 10, 20, or 50,000 tons of compost for their fields. I do want to mention at this point one comment. I told you earlier on the slide that we could sell to Scott's at a wholesale level at $24 to $28 per ton. If we sold that same product to the agricultural community locally, we could sell it for $32 to $40 per ton. And that's obviously our focus. That's where the bigger bite at the apple comes from. But above and beyond that, if we're able to develop a retail product, the kind of bag that you sometimes buy at a Home Depot or Lowe's, that product is a $600 to $1,200 per ton product. So there's some really rich economics if you get into the retail business. It's not our core focus, but it is an opportunity if we're able to develop a brand and a distribution network to allow us to sell into the local retailers. And we certainly could sell some of this locally at our collection center. So when people are bringing their yard waste for processing, we could offer them retail compost that they could bring back for their yard work. And it's obviously highly profitable. Let me talk briefly about the financial projections, both management's projection as well as our haircut to that in terms of what we use to underwrite this transaction. Management believes they can take a business that this year will produce about $19 million of revenue and drive that up to about $42 million of revenue in 2025, essentially growing at around 21.5% compound annual growth rate over that time period. They're doing that really through two things happening: being more aggressive on the front end, drawing more collection center business in and getting paid more tipping fees, but also selling that compost on the back end, helping drive up the dollars. And they believe that they can drive what starts out at about a $4.9 million EBITDA, roughly 25% EBITDA business, and drive that up to 47%, really through this the greater efficiency of combining the two businesses, stripping out some of the costs, and getting much greater productivity out of the electrically powered and perhaps solar powered equipment that will drive the processing and the transformation of yard waste into compost and wood pellets. MiddleMarch took a more conservative approach to this. We think that there is absolute margin improvement here, but in our case, we underwrite to a $15 million EBITDA in 2025, not 19.6. So we're talking about a case that's about 25% lower, and we simply made more conservative assumptions about price realization. We didn't go to $40 per ton in the agricultural market. We did more like $32 or $33, and we assumed less aggressive efficiency gains from the way the technology and process transform the value chain. In terms, so with those numbers in place, we think this has the potential to be a very interesting investment that will be scaled up as a single business. Forget about the fact we may be able to do multiple locations in the state and perhaps multiple states, just using this one MSA with its 3 collection centers and its compost production facility. We think it presents an attractive investment that somebody would want to buy as a standalone, to either merge into a larger enterprise or to use as the blueprint for more compost related business down the road. So for that reason, we want to talk a little bit about the investment transaction, because there are some unique features here that are worth unpacking. We will be investing through a MiddleMarch special purpose vehicle, specifically for this investment, with the limited partners who elect to join us, and hopefully some of you will elect to join us in this investment. We'll be investing in the exact same security as RFE is investing in. So let me take a second to talk about it. It's a $30 million equity investment total. We have the potential to invest up to $10 million in 2 distinct securities. Half the money will go into what we're calling the A1 preferred equity. That is an 11% current cash dividend security and a 3% deferred dividend. This is an unusual piece, but this has to do with the fact that RFE is an SBIC fund. For those of you who don't know these kinds of investment vehicles, this is a private equity investment fund that is levered by the US government, by the SBA, provides a certain amount of debt at very low cost to encourage investment in lower middle market companies. So it promotes American business. And because of that, RFE wanted to make sure that there was a cash dividend component to this investment to help pay for the leverage that's internal to their fund. So they structured it this way. For us, it means that half our capital is going to have a lot of cash pay. And I think it's an attractive component because it's unusual for a growth equity company to be able to make these kinds of distributions. The other half of our money will be in something that looks a lot more like a traditional private equity security, an 8% preferred dividend to be paid out at the discretion of the board. That's very typical for a growth equity company. But when you put these two together, you're getting essentially 11% dividend, 11% preferred dividend, with 5.5 of the 11 coming out as cash pay, and I think that is attractive. Secondly, this security is a participating preferred security. So before the common shareholders, which are management and the operators, can participate, they have to, the company has to satisfy all of the principal that we invested, the up to $30 million collectively, plus all the unpaid dividends have to be paid off prior to sharing economics with the common equity owners. So we're very advantaged structurally. We're getting all of our capital out before there's any participation for management. And we have about a 60 to 70% share of those excess returns above the preferred return, which means we're getting between 70 and 80% of the total returns in this investment. The reason that there's a range is there's a performance ratchet that will allow management to get more of the excess returns if they produce a higher total return for all investors. And then finally, there's very little debt in this transaction today. We're going to raise 30 million of equity, and there's probably going to only be a $5 million of debt raised to help support the acquisition of some of the CapEx. And you probably are wondering why so little debt. And the reason we are starting this transaction with so little debt is because our RFE has essentially got debt embedded in its fund, and so it wishes to pursue this as an equity transaction. However, it's made very clear to us that they are prepared to allow this investment to recap the debt of the equity at some point in the not too distant future, which will allow us to do potentially a dividend recap, or to use that debt to help finance acquisitions of additional collection center and composting center opportunities. We like this transaction. We were on the side of management putting the deal together, and it satisfied what management wanted. But as investors, putting our other hat on, we think this is an attractive security. It's got a high cash pay dividend. It's got the participating preferred structure, which protects us in the downside, and the liquidity ratchet aligns us with management to make sure that they're trying to generate a strong return for us as well as for them. In terms of the sources and uses, I've mentioned we're raising 30 million of equity. Up to 10 million will be coming from MiddleMarch. $2 million of the equity is a rollover from the selling shareholders of the collections business. That represents about 10% of what they're receiving. And I think this is a very strong endorsement that people who've been in this business for over 20 years recognize the value of what Mark Owensby and Roger Johansson have designed, this business system. And so they're rolling over 2 million, and RFE is prepared to provide whatever equity is required to satisfy the 30 million at closing. And then we'll add about $5 million of debt to help partially fund the acquisition of the equipment and machinery. And the uses will be to buy the collection center business and the compost production facility. This is a 5 to 6 times multiple on EBITDA for those businesses. We're going to spend about $3 million on working capital transaction costs, a significant portion of which is really focused on the sales and marketing function. That's the one function that has significant enhancement required. Why? Because we want to build out the collection center business by really marketing to all the businesses, the real estate owners, the multifamily real estate owners, the REITs in the local area, and the municipalities that all produce a lot of yard waste. We want them to be driving their volumes to our collection centers. And we also want to cultivate that agricultural market. We want to develop a relationship with Scott's, and we want to also develop relationships with agricultural firms in the local area. All of this requires some salesmanship. And so we are hiring people, and management is in the process of identifying the people they want to bring on board who can really help build those two discrete streams of revenue. And then finally, we're going to spend $8 million primarily in 2022 on CapEx, high volume electric processing system, $4 million worth in the collection center business, and $4 million of electrically powered compost screening loading systems like the windrow turner and some of the processing machinery that's used to create the compost. So those are the sources and uses. In terms of the returns for this investment in our conservative base case, I'm going to just draw your attention on the page. This is really looking at the next 5 years, and we think 5 years is a reasonable horizon for a hold period for this investment. We expect to get to $15 million of EBITDA. You'll see that in the 2025 projection. And at a 7.5 times EBITDA multiple, you're looking at about $123 million of equity value. You're receiving along the way about $8.5 million worth of cash dividends. You see that in that 1.7 that is the total amount of cash dividend for the $30 million that's been raised. And then there's a return of the principal and any accumulated dividends that hadn't been paid. That's the preferred return. That's another 37 and 37.8. So the preferred return is $46.5 million on a $30 million investment. So that takes care of that. There's $83 million left of profit after those distributions. And now we assume to get 70% of that. That's about $58 million, $58.5 million. So all in all, we put up $30 million of equity. We will receive $105 million of proceeds along the way. And that turns into a 3.5 times multiple or 30% IRR. We think that this is a reasonably conservative projection. Management's case is higher. They would produce a 4.3 times multiple on invested capital and a 35% IRR. And this does not include any leverage factors from refinancing the equity with debt, doing a dividend recap. That would significantly enhance the margins. It doesn't include any geographic expansion beyond the first local market that we're after, nor does it include the addition of wood pellet sales. And I just want to take a second to talk about that opportunity because it is real. It happens to be a somewhat more volatile market, very much affected by the price of coal, how much electrical power is being generated, and the alternatives that are available. But we know that we think that the wood pellet business, especially focused on Asia, and we're near a port, so we can put it on ships. We think it could add $15 to $17 million of top line revenue per year at a reasonable clip. So it could significantly enhance the business. It's not part of our base plan, but we think it is a possibility, and we want to preserve that optionality, but not make it into what our expectation is for the business. So at this stage, for investors who are interested in learning more about this investment in Project Green Loop, you should request the investor presentation either from the Family Office Networks or speak directly with us at MiddleMarch. For those of you who are interested in participating in investment, you should sign the NDA, which will allow us to give you access to to company-specific information. You'll know what the name of the company is, where it's located, and you'll have access to some of the due diligence materials, which will allow you to make a more informed decision about whether you want to participate in our SPV. And then for the investors who want to invest, come speak with us. And that's myself and my partner, David Tanzer, who is integral in this investment as well. So at this stage, I'm prepared to cede the floor back to Lindsay to answer any questions people have about this investment.
Sasha, thank you so very much. Great job on your presentation today for us. Very high level and informative. Yes, to our attendees, let's jump into Q&A. As I mentioned at the beginning, we really encourage your questions. So again, submitting those through your questions chat option over on the right side of your screen. Sasha, I'm going to just kind of dive right into some questions that I've pulled through. First, is the volume of yard waste collections growing in the market that Green Loop operates in?
This business operates in a very fast-growing state that's in a warm weather environment in the Southeast. So yes, yard waste is growing in the local market that it's in. It's the #1 market in its state, and it really is it's a product of more people moving to this state, more real estate development, and more agricultural activity. Both agriculture and immigration into the state have been very strong. And so that combination means that there's going to continue to be more and more green waste that has to be processed.
Okay, great. Now let's talk a little bit about compost. Is that demand growing as well in the market?
So compost is absolutely growing, and I think this gets at the mega trend that I think you can see both nationally and politically. There is an increased sensitivity to environmental impacts, and clearly compost is a superior product for enhancing the nutritional value in soil over chemical fertilizer from the standpoint that it retains more water, it has less of second order knockoff effects on the groundwater. And I think there's clearly been a very strong demand at the consumer level for organic compost. I think for the institutional market, it's going to take a bit longer for them to get comfortable with it because the stakes are a lot higher for them. They need to know that the compost is high quality. They need to know it can be acquired in large volume. And so that's part of our education process. But we think it's pretty obvious that compost is a topic that's receiving a lot of attention these days. There's a company called Anuvia, which is creating a patented new compost technology, which we want to recognize. And some venture capitalists have put about $105 million into this company to build a innovative compost product. So I think there's a lot of validation that this market for compost is growing, and we want to be part of it.
Great. Now, Eric has a good question here. He wants to know what qualifies as organic. And if it's a household yard waste, would there be pesticides that are involved in that yard waste?
That's a good question. And I actually am not totally prepared to answer all of it. What I can tell you is when yard waste comes to the collection center, it is processed separately. And so if yard waste is coming from a consumer home, I'm not sure whether questions are asked about how that consumer processes their yard. But it is a good question, and I don't have a great answer for it yet. But what I can tell you is that at the end of the day, we have to go through an OMRI certification process, which will determine whether the product that we're creating meets those specifications. So if OMRI doesn't find that the output, the compost product that we produce, it's their specifications, we won't get the certification. So I think there is a whole series of steps that have to be taken to ensure what we produce meets those requirements.
Yeah, thank you so much. And kind of adding on to his question here, how quickly can materials be turned into compost? And how do you avoid a log jam at the facility?
It's a great question. So in the world of compost, it can take as little as 60 days to produce compost, and it can take much longer. And it has to do with, remember I said earlier, how much oxygen are you putting into the compost? You can almost think of oxygen, you can almost think of the composting process like a fire. And the more oxygen you put into the compost, the faster that process goes. The windrow turners help you accelerate that process. So whereas in the conventional world, it's a longer process, they're not really processing it much. They're putting it in big pots. If you look at this picture, the pictures on the page, the picture in the upper left-hand panel, that's really unstructured. That's just a big pile of compostable material that's just going to organically be converted into, degraded into a product that has nutritional value, but it's not done quickly. What we're doing is looking at the middle picture, we're going to process the materials. Some of it goes into the wood waste pile, some of it goes into the leaves and grass pile, and then we use those windrow turners on the right to accelerate the process by which the product gets turned into quality compost. And that's probably about a 60-day process. But you need technology to do that. It doesn't just happen on its own quick. You actually have to manage the process and ensure that it's appropriate.
Fantastic. Thank you, Sasha. Okay, a couple questions. I'm going to loop them into one from Trish and Nancy here. If we could clarify what the minimum investment is, and then how much of the company will investors own for $10 million if they invested?
Okay. So to answer the first question about investment size, we have essentially we actually have a number of different minimums, if you will. Our minimum investment is typically $500,000. We can make exception for people who are extremely interested in investing at the smaller levels. We also have an opportunity for larger investors over 5 million to potentially invest direct into the company. So for larger institutional investors, there may be an opportunity to invest directly, and for smaller investors, they'll come through our vehicle. In terms of how much of the company one would own for a $10 million investment, you will own approximately about 15% of the company.
Perfect, thank you. Let's see, moving on. Why is so little debt used, and will the company take on more debt post-closing?
It's a great question, and it's an understandable question. This transaction is being underlevered initially by RFE because RFE believes that given the structure of their fund, they can basically provide a very significant portion of debt-like capacity through their fund vehicle because their fund is levered, so that the leverage is embedded inside their equity structure. But they're also very commercial, and they know that a year or two from now, there will be a very strong appetite to refinance out some of the equity, either in the form of a dividend recap, where we would basically bring debt in and pay out some of the equity that's in currently at a much higher valuation than we're coming in today, and or use the debt as a form of currency to lever the company up and use that cash as a source of currency to acquire additional assets, either in adjacent geographies or other states that we might choose to go into. There's no question from the conversations we've had with RFE as well as management that the goal is to build a much bigger business than what we've shown you today. This is one MSA with 3 collection center locations and 1 processing facility. We could potentially increase this by a factor of 10 without too much difficulty if we add a few more cities to the mix, and if we're in multiple states, it could be bigger than that. We haven't baked that into our numbers, but that's really where I think leverage is going to come in, and RFE is very keen on scaling this up as a platform company, and they would expect to bring in other investment partners down the road to help them grow this beyond this initial platform investment.
Great. And Sasha, how long do you think the lead sponsor will want to hold the investment, and what is the typical timeline there?
Yeah, well, you know, I can give you the standard answer, which is I think it's about 5 years would be the ideal hold period. It could be longer. Has to do a lot with how fast and how long the expansion into other geographies occurs. I think we need to give this first location for Green Loop a chance to prove itself. We feel very confident that, you know, we're not doing anything truly innovative here other than putting the pieces together. The technology that you see on the page, none of that is new technology. It just happens to be new to this industry that is not accustomed to spending $8 million on equipment. They're using old diesel equipment. They don't have windrow turners like this in most of their locations. So we're not doing anything radical, but if we decide to do a very large expansion into multiple locations, it might make this investment a longer hold to fully flesh out the network. But I think realistically, a 5-year hold is reasonable. It could be a little bit longer, but I think that the folks at RFE are used to raising funds, pretty regularly. They're on their 9th fund right now, and they're looking to round that out with additional investors over the course of this spring. So I would expect that the 5-year hold is more than sufficient to demonstrate the results, try to monetize those results to, position them as a fund for their next fund.
Perfect. Let's see here, moving on. Let's talk about employment, right? So does the company have all the management it needs right now, or is there going to be important additional hires that need to be made?
Before I answer that question, I just want to say one thing about MiddleMarch's relationship with RFE, and given that we'll be a smaller equity owner in the business, how comfortable are we with RFE? One of the reasons why MiddleMarch doesn't invest in every company that we advise as bankers is because we have to be very comfortable with lead sponsor that we are copacetic with them. We have a shared vision of where the business is going because we're not going to be in control. We'll have a say. We'll be board members and board observers, but we're not in a position to control the investment. In the case of RFE, they have a very explicit game plan for this investment that they've shared with us and that we're on board with, which is to build value over the course of the next few years to a point where we've got a scaled company and most likely sell it. And I think that lines very well with our investment expectations. We'd like to hold this investment for 5 years, create liquidity for our LPs, and raise our next SPV investment vehicle. So, we have a real alignment with RFE. In terms of hiring, the great thing in this business is that Mark and Roger are bringing a real vision and a kind of top-down management approach to integrate and optimize the component pieces that have been acquired, or that are in the process of being acquired. The management teams at the collection center and at the compost center are quality people. They've been interviewed, they've been diligenced. They're strong operators. They don't necessarily have as broad a vision and the idea of an integrated vision, but that's really where Mark and Roger are educating them and bring them on board. The one place where we have a very strong CFO at the collection center business who will oversee both sides of the business, and I know RFE is particularly happy with her. As are we. But the area which really needs the most attention is the area that historically hasn't been much of the business. It's the business development function. So it's a lot about hiring people to help cultivate the local market suppliers, if you will, of yard waste. And that's, again, municipalities, real estate developers, mall owners, anybody who has a large scale real estate property with a lot of grounds that generate a lot of yard waste. And we also at the same time have got to cultivate relationship with the Scotts of this world and all the agricultural community. And so we're in the process of recruiting people for both of those functions. And that's where some of the money is going to be spent organizationally. It's on those two business development functions.
Perfect. Time for a few more questions. I want to be mindful of everyone's time as always. So I'm going to kind of lump these questions together here as well. How does MiddleMarch help potential investors understand this opportunity, Sasha? And what role does MiddleMarch play in the investment after it's made?
So for anybody who's interested in investment, you're going to have a conversation with us, obviously, after this call. And we're going to detail for you a lot more about the business. Hopefully you'll sign the NDA and we'll be able to share with you our diligence, our investment memos, some of the raw material, the financial information in forms that will make it very easy for you to see what exists today and what needs to be built. You'll see some of the inner workings of our investment process as well as RFE's investment process. And then, we hope you can make a determination whether you're comfortable allowing us to advise you on an ongoing basis and manage the investment for you and build value over the next years as we try to grow this company into a company that's saleable. Along the way, you'll be getting quarterly reports from us that detail what's going on with the business, how we feel the investment is going, what potential growth or expansion opportunities we may have an opportunity to participate in. And we'll do that in the same way that we did when we were at firms like TH Lee or Elevation Partners. David and I have both been venture investors in the past in professionally managed funds. And we're more than comfortable providing our LPs that same level of transparency about what is going on in the business. So while you won't be attending the board meetings, you'll certainly be getting digested versions of what's happening in the business and reports on its financial performance.
Fantastic. Thank you so much, Sasha. It was a pleasure having you today. To all of our attendees, we thank you so very much for joining us as well. My name is Lindsay with Family Office Networks. I'm going to be following up with everyone individually, so if I can get you in direct contact with Sasha or David, I would love to make an introduction. We hope you all have a great day. Thank you.